Hello everyone. Today I want to start a series of videos on introduction of insurance. I've recently reading through the internet or the interweb that you might call it. Um, One thing that I found was that there's not so many great introductions of insurance products and why the history of insurance. And instead, I found quite a lot of advertisements from different insurance companies trying to sell me life insurance, auto insurance, and property insurances. But I don't even know what they're trying to do, like what kind of products they're providing. So I say, okay, might as well do some research on my own and let's start a series of insurance introduction. And hopefully it can help someone if they maybe show up on YouTube and search for like insurance product, they might know a little bit better about it. And I also want to focus a little bit on the history because I feel like after having experience working in insurance companies and learning insurance myself in undergraduate studies, I found like insurance companies like and actual science overall, like people might don't even know what's actual science, it's kind of like underappreciated. So these are the primary motivations that I try to do this. So without further ado, we shall start this whole series. So at the beginning, I want to talk about like why do we even have this kind of thing? Why do we even have insurance? So the motivation for this kind of insurance product is that the very first point is quite simple, is that it's kind of meeting a kind of demand of the people. And these demands can be summarized into the following 3 points. The first one is people are afraid of to die too soon. Like it's a very simple example. Nowadays, I'm like 22 years old, right? And when I think about if I die like before 25, the, the, the kind of thing, the kind of thought actually drives me crazy. There's no way it's going to happen. Well, I mean, like I don't want to jinx myself, but it's kind of dying too soon, right? If you're like 80 years old, I don't want to say something controversial, but you had a pretty decent life, like really long one, for sure. So die too soon is actually the primary demand for like insurance product. The idea is that if you die too soon, then there's going to be a lump sum of money remedy for it, even though you cannot enjoy it, but someone else can, like someone else that you actually care. So that's the first demand. The second demand for insurance types of products actually is live too long. What do you mean by that? Shouldn't all people live really long, right? Like people enjoy their lives longer with longer lifespan. Why don't people want it? Well, if you consider yourself, say for example, you're looking at like pension system, right? People after they retire, say about 60 years old, they can get pensions from the government if they actually put in money into pensions. And there are also countries in the world that they don't even have pensions, or the pensions are kind of like minimal. Like here in Canada, where I located, the Canadian pension plan actually pays quite decent for the people after their retirement. However, even though it is decent, but it's not going to make the ends meet like for all Canadians, or at least like in North America. But I don't want to talk about my neighbors, like the U.S., which things will be a little bit different, and they might actually consider themselves, maybe I'm living too long to actually pay my next month utility bill, and that's also a concern. It's no longer a life and death issue, but it's actually a financial thing, right? The quality of your life might not be considered as equal. And there's actually some insurance product can help you with that. And last thing is becoming. So people might think between dying and living, what might be the middle ground? Well, the middle ground is probably as miserable as you might think, is actually becoming disabled or seriously ill. Forgive my messy handwriting, and it might not be legible, and I do not intend to change it at all. So becoming disabled and seriously ill, that's literally the middle ground, right? And all these three things, there's one thing in common, is that you really need money. What do you mean? If you die too soon, you lose the ability to earn income, you lose the ability to earn money. That's a very simple rule. You just died, right? You passed away. So there's a requirement for financial remedy. And in the second case, you live too long, your longevity actually drives out your ability to earn income. And you also have a problem of financial needs. And the very last case is probably, there's an old saying in Chinese, is that you might as well just died in certain circumstances. It sounds very pessimistic, but financially is quite true, right? If you cannot even earn income and you cannot enjoy your life, and you might be still young, that's usually what people use the word tragic to describe. But we show love to them afterwards. So becoming disabled and seriously ill is like all these three things that share one thing in common, is that all these three types of demand require certain types of financial support. And that's exactly what insurance types of products are trying to provide. So another thing about insurance industry, especially in North America, which is quite a supporting, or I would say import significant industry in North America, especially in Canada. So in Canada, it is very one of the lucrative industry. It is not only operating in insurance industry, it also operating in financial industry and providing funds to different entities. And these three things are usually summarized as like the top three concern of Canadian financial needs. And people might think, so how does this all start, right? This is our motivation. This is easy to understand. Like people on the streets, they think they probably need to live about like 5 years. They will realize that this kind of motivations are quite natural for us to bring up the idea of insurance. But how did it all started? The history actually started, the first story, like Nolan story, as far as I know, 1583. So it's time ago. A lot of history happened between. And England, but someone will say, where's America? Yet, somewhere in England, someone called, let's use this. So Richard Martin, it cannot be more English than that. And let's use the head to denote what, you might ask. His is an entrepreneur. He's an entrepreneur. What do you mean by that? He's literally just a very successful person. At that time, he has a business, and he's literally a self-made man. So he's a little bit different than all the bureaucratic families at that time. He does not have a family history of royalties and stuff, and he's literally a self-made man with his own businesses. And he has a really reliable look fine, but William Gibbons. So he's a manager. Just like today, you have CEO, right? You have directors. And William Gibbons is really powerful, and he's quite reliable, generating a lot of revenues. So what he can do, he can generate quite a lot of revenues. He's also a great cost saver for the company. So in some regard, the successfulness or the success of Richard Martin's enterprise is was quite like based on what William Gibbons can provide. So in some sense, you might think that William Gibbons is a powerful asset or powerful human resource for Richard Martin. And I mentioned one thing for Richard Martin is that he's a really self-made man, which means he is not so friendly or say comfortable with other people with royalty background. Okay, I cannot spell. Royalty background. So one day, your friend Richard Martin shows up to a country club, right? This is a really hypothetical and sketchy country club. Off he goes. And there are a bunch of people in there. Note about they are the country club members. They are the country club members who have royalty backgrounds. And in some regard, they kind of envy Richard Martin about his success. Because, you know, like Richard Martin, he had nothing at the beginning, and he ended up with everything. Well, we, the country club members, we had everything already, but we're kind of useless with the society norm. And they feel a little bit of jealousy in that regard. So, and at that time, there was something that's really important, is that there was a gambling culture. It is not uncommon to see a bunch of people starting to gamble on each other's life. It might be common if you see like some Wild West movies. You see like two people, they start drinking bourbon, and all of a sudden they pissed off at each other. They start saying that I'm betting that I can shoot you in the head right outside. And they're gonna gamble each other with one shot. One of them gonna win quite quickly because I mean bullet in the head is gonna be a death call. And that was the kind of culture that we were saying here. So what happened is the country club members started a wager. The wager is quite detailed. I would say that the whole story itself is anecdotic, and the wager is saying that, well, the country club member said, what if your friend William Gibbons die in 12 months? That is literally the last thing that Richard Martin want to think about, because Richard Martin is everything, probably even more important than his wife and family. And what if this happened? And if it is just a hypothesis, then there's not going to be a wager. So what's a wager? The country club members added, if I within 12 months, then country club members pay how much? time this was 383 pounds. Hopefully that's the correct way to spell it. 3 pounds to Richard Martin. Else, it is really like programming, else nothing happens. But this wager, I mean, if there's no price for this particular wager, then I would say any rational person in the world would gonna take it, including Richard Martin himself. Therefore, the country club members, even though they're all royalty and they're useless by the society norm, but they do know that there was supposed to be a price to be paid. And it was something called a premium. So basically, the premium is that Richard Martin needs to pay the country club members how much for this thing? He needed to pay 8% times 383. Today you might think, it's only 8%, he's still gonna do it, right? But you need to consider the fact that like William Gibbons not gonna die. What if that's the case? Then you literally just spend your 8% of £383 for free to the country club members, right? So this is indeed a wager, even though the proportion might not be the same, but overall it is, I would say, like quite fairly, because what's the probability that William Gibbons is going to die? Hopefully not lower than 92%, right? And that was the situation. So wager itself was settled down, and they actually confirmed it's going to be done. So who confirmed that? Other country club members. They of this event and of this contract in some sense. So the time start with first month, second month, third month. All these times, William Gibbons is still alive. And time goes on and on and on until month of the year. Depending on you're talking about calendar years or lunar calendar years, but I believe it's just calendar years at that time. And William Gibbons died in the last month. So let's show some respect. Rest in peace. Off Gibbon to heaven, hopefully. And so Richard Martin is in dismay. He lost literally everything, right? If you think about it, he lost the sales. He probably gonna incur more cost because the cost saver is gone. But there is some highlight. I wouldn't say highlight. He shouldn't smile about it, but there is some highlight. The highlight is that the country club members will be mandated to pay 383 pounds to Richard Martin. I don't even know the inflation rate back to that time, but I would assume 383 pounds is quite a large amount of money if you convert it to today's scale. And there were even some they were even having legal issues. Why? Because the contract itself is not very certain about what are the calendar years or what are the month counts they are using. So the country club members were, trying to be sneaky and try to skip the payment or try to, use some legal resources to bypass the contract itself. So that was literally the very first insurance case that you're looking at. And in this one, I want to summarize something. You might find it helpful because if you just listen to this story, I'm not the best storyteller out there, but I want to summarize this into something that you can probably remember and use this case to understand some different terminologies of the insurance products. So the very first thing is that you might want to know some terminologies. Terminologies are important because when you go out and buy a particular insurance contract or product, you probably want to know what they're talking about, right? You don't want to be fooled by your sales representative, so you want to know the thing. So there's something called policyholder. So in this case, the policy, which I would define as 0. So the policy is the wager in our case, all right? The wager itself, in this case, is a legal contract. Remember that I said that they actually went to the court and talked about the issue, right? They argued about it, but it is still considered like a legal contract. And the policyholder in our case is the one who's going to receive the benefit and decided to get into this wager at the first place. And his name is William Gibbons. Oh, sorry about that, Richard Martin. So he has this particular contract. And the contract issuer sometimes is called issuer, or say insurer, like modern days insurance companies, and in this case will be the country club members. What else do we know? We also know that the life insured, so basically the one they're betting against, right? And that will be William Gibbons. Okay, can I spell? Nice. We also have something called beneficiary. This should be quite self-explanatory. It's the one who has actually received the amount of payment. And we look back at this story, it's quite clear. In our case, the beneficiary is Richard Martin. What else do we know? We also know the death benefit. Yeah, it's a very interesting word because it's called benefit of death. I don't even know like what are the benefits of being dead. But death benefit in our case is the 383 pounds. 383 pounds. And in order to keep this contract legal and in place, there's something called the premium. Most of the time you'll think about it as like insurance premium is paid monthly or something like that. But in our case, it's a one-time installment, 8% times 383. We also have a contract duration. Or effective period. That's probably something that's more understandable. Or you may think of it as term. And in our case, it's 12 months. And one last thing that a lot of time people might forget is that this is a legal contract, and who knows what happened that day in a country club. Might be both of them are making up something. Who knows? But we do have witnesses, right? And in our case, it's called underwriter. Again, the country club members. So those are the ones who actually make this particular contract into legal action. So that's the overall thing. And this is the very first introduction of the series of video. And today we just talk about like what's the first insurance case and why do we even care about insurance, and also some basic terminologies. And from this point on, when we talk about insurance, our focus will be a little bit more detail-oriented in the North American framework. And another reason I want to make this particular video is that I know a lot of students, because myself is currently a student in the University of Waterloo, and I know a lot of students who want to have a career in actuarial science, and they need to go through some basic electives that are quite important for insurance career, and they're required to take this course. And sometimes when they go into lectures or they skip lectures, I feel like it's probably not that worthwhile for you to skip such an important lecture. Maybe you think you can read your textbooks better or read the slides better, but joke's on you, there's no slides. And that's why I want to create this series of videos. It's totally for free. Hope you like it. Like, you probably shouldn't like it. I hope you study it and you get something out of it. And that's another reason I want to do this. And hopefully I'll keep this going, and see you next time.